Investors who bought Cardano ADA at the end of 2020 practically bought the lows because ADA went on an epic bull run adventure at the beginning of 2021. This proof-of-stake crypto had a fair share in the bull season and surged more than 2,000% to reach its all-time high of $3.09. But then, disaster struck. Prices declined sharply in the months that followed in line with the wider global markets, with ADA losing 87% of its value. The coin appeared to have broken out in a downward trend in March of 2022, indicating a possible reversal, yet not sustained. So the question is, how low can ADA go? The ADA coin price has crashed several times, and perhaps we lost count of those times in particular. In a quest to stay realistic, many experts have predicted its fall, even during the times when it seemed like things were getting better. Amid the stiffening predictions for Cardano ADA, experts have managed to paint Bitcoin as the good guy. The legendary trader Peter Brandt was one of them. The ADA coin price began a downtrend in mid-May of 2022, according to Brandt, and ADA has continued unabated despite bullish Cardano news like the Vassal hard fork on September 22, 2022, plus he doesn't short prices. Last year, Peter Brandt admitted that Cardano's price chart does not always accurately anticipate ADA's price moves, but when they do, they work well. Notably, the trading veteran steers clear of altcoins, but invests in Bitcoin prices and Ethereum prices in his capacity as a professional consultant. One of his predictions, which triggered fear within the Cardano community, was the ADA USD chart is the classic descending triangle per Shaybacker. Edwards and McGee suggest a possible decline to sub 25 cents. Do the charts always work? Not really. But when they do, it's a thing of beauty. Note, I do not short. Now, a descending triangle pattern is created by drawing a trend line from a high that touches the price of the subsequent lower highs before joining with a straight line that passes through a group of lows, which is often used when traders are looking to open short positions on crypto. Still, Brandt clarified that his bearish Cardano price prediction does not indicate that he will short. Some users fired back though. T-Mobile software developer Jabata Saha stated that Brandt's analysis was the equivalent of astrology science, dissing his Cardano price prediction. Your chart science is equivalent to astrology science, which chart prediction reassembled the lunar crash. It was even around this period that Brandt predicted that Bitcoin would hit $250,000. Bitcoin is the good guy after all. Similarly, Ethereum maximalist Evan Van Ness criticized Cardano ADA for being a zombie blockchain with a significantly lower transaction speed than decentralized exchange Uniswap, despite having a higher market cap than an automated market maker. So far, the performance of the Cardano ecosystem has only validated these claims. Truly, leading up to the Vassal hard fork, ADA's price showed no increases. User activity was slowing down as well, showing bearish movement instead. But the total value locked in the Cardano DeFi ecosystem rallied 6% after the Vassal upgrade. Recently, even amid the SEC regulations and delisting of ADA on crypto exchanges, it was even more surprising when renowned crypto expert Benjamin Cowan predicted a greater fall was imminent. He noted that ADA could crash 50%. Then what is left of it? Benjamin Cowan raised concerns of the future of Cardano's native token, ADA. In a Twitter thread, Cowan shared his perspective on the ADA's price action, suggesting a potential downturn on the horizon. According to Cowan, the ADA to Bitcoin exchange rate stood at 900 sats, a level reminiscent of 4 years ago. He highlighted that the historical data suggests that ADA could experience a major drop and the altcoin market could be unforgiving, warning investors of a potential 50% decline. Elaborating on his findings, he presented a chart illustrating his projected direction for ADA's price movement against Bitcoin. Drawing from the token's price history, Cowan outlined a trend line starting from the bottom of 2018. Based on this pattern, ADA is at risk of revisiting price levels last seen in the third quarter of 2019, potentially occurring in the same quarter of 2023. Just as Brandt does not short, Cowan emphasized that as an analyst, he primarily evaluates altcoin charts to Bitcoin. However, his skepticism extended to ADA's value in dollars as well, thus anticipating that the token's price may revisit its previous lows before the years come to a close. This predicted storm, and Cowan's analysis, serves as a wake-up call for those invested in the altcoin. The future of ADA is now hung in the balance. A dip is in fact coming. The bad news doesn't end there either. Binance US, the United States-based branch of the largest cryptocurrency exchange, announced its decision to discontinue and cease trading for certain USD advanced trading pairs. This action is part of the exchange's shift towards becoming a crypto-only exchange, where it will exclusively support trading between cryptocurrencies and stablecoin pairs while eliminating trading against the US dollar. In an official statement released recently, Binance US confirmed that it will permanently remove and discontinue trading for various cryptocurrencies, and the affected ones include Bitcoin, Ethereum, BNB, Litecoin, Polygon Matic, Cardano, Solana, VeChain, and the USDC stablecoin. This in of itself is quite sad, to be frank. However, the current reports from the Cardano Network suggest a booming surge. No guarantee yet, but things are getting quite better. The Cardano Network has smashed a big milestone in transactions, which has hit the 71 million mark. According to the weekly report by Cardano Builder Input Output Global, the total number of transactions has reached 71.2 million. And there's more. The number of native tokens have seen growth, currently reaching 8.55 million. These were minted across 77,035 token policies. With the graphic posted, 134 projects have been launched on Cardano, while 1,264 are in various phases of development on the blockchain. A Twitter user, identified as Chris O, stated, #Cardano community, that time of the week again. Massive progress as usual. Mythro is about ready to launch the beta version on the mainnet, and the age of Volatility is nearly upon us. Also, an analysis provided by Into the Block in May on the Cardano Network, the on-chain analytics firm noted that Cardano transaction count stayed quite stable during the bear market conditions, recording an increase from the yearly lows. A clear increase was equally spotted in transaction volumes, pointing towards activity. A major catalyst seemed to be the Hydra upgrade. Hydra is a layer 2 scaling solution that was created to increase throughput and scalability of the Cardano blockchain by processing transactions on a sidechain. Also, the total amount of ADA placed in DeFi applications on Cardano has significantly increased and reached new all-time highs of 720.27 million ADA, according to the data from DeFi Llama. Other advancements for the Cardano blockchain were reported in IOG's report. The Lace team released version 1.3, which introduced ADA handles support for the regular and personalized handles, which users can test in the preview testing environment. Mythro is also approaching beta launch on the mainnet. Cardano's TVL spiked to 209 million, the highest point in the year. However, as of this report, the value has slightly retracted to 192 million. The growing TVL is linked to the rise in the network's decentralized exchange trading volume. Since the beginning of this year, Cardano has witnessed an increase in its transaction volume, reaching a peak of $274.81 million in June. This trend is holding steady with the latest record of 92.85. The market cap was not left out. It has seen significant growth, rising to nearly $13 billion on July. Between July 13th and 14th, ADA received an inflow of $2.10 billion, increasing its market cap from $10.11 billion to $12.89 billion. Yet it suffered a correction to $11.7 billion. The rise in its market cap correlates with a sharp increase in ADA's value over the same period. ADA peaked at 37 recently, reflecting more than a 16% gain, but then has slightly retraced back to 33 cents. The Cardano price rise has put ADA back on investors' watch that are attempting to reap the benefits of the market rally. However, this means one thing. The investors that held onto their assets through this bear market are now in a condition to mint some profits if they decide to sell. But to reach this level, this cohort has been holding onto their ADA for nearly 2 months now, and this behavior is evident by the change in the number of addresses that belong to the short-term and mid-term holder cohorts. Addresses in the former cohort tend to move their supply around in less than a month of acquiring it, while the latter are the ones that have invested their tokens for more than a month but less than a year. Fortunately, the rally over the past month has helped them recover these losses, and they have now set up tokens up for profit, with a prayer that the Cardano price doesn't begin correcting. The nickname Ghost Chain was bestowed on Cardano in 2021, when there was very little activity happening on the platform. 3 years later, and things have changed, and Cardano is gradually establishing itself as a flagship blockchain. ADA's recent performance has been a great help in this metric. So we need to reframe the question. It's not how low Cardano goes, but how high can it mount? But that's going to do it for today's video. Make sure you click on the subscribe notification buttons, and we'll see you in the next video.